We've got Mr. Rohit Srivastava of India Charts joining us on the show. Rohit, hi. As good a time as any to be speaking about the market right now, given that we've once again seen an uptick coming in terms of the geopolitical escalation between US and Iran. While no one knows where that is headed in the near future, can you give us a sense of how you're looking at the index? 24,230 is where we're at just yesterday. 24,520 is a level that we were trying to cross, but then we saw some expiry pressure at play. What would be some crucial levels to watch out for, both on the support and the resistance?
So for the last 5-day advance, we've almost retraced 50%. That comes in at around 24,180. I would say that, some kind of retracement is fine as a pullback to the rise, but the overall trend still does not show any change when we look at, the momentum indicators. So overall, we would still see this as a higher high, higher low, upward trending market, pulling back as and when, there's an extreme, there's some sentimental disturbance, but eventually heading higher. So that is still the setup. There's no change in that. Even on Bank Nifty, if I look at the levels, the 20-day average comes in at around 57,490. Even if we go a little below that, maybe till 57,000, we can have some downside. But eventually, I think we will be headed much higher from here. And so each dip would only end up being a buying opportunity.
So every dip is a buying opportunity. That's the word coming in. But Mr. Srivastava, any view on the FMCG sector, given the carnage that we are seeing in trade today? ITC, Dabur, Tata Consumer, HUL, all of them declining anywhere between 1.5% to 2.5% in trade today.
So if I just look at the FMCG index, it bottomed at around 47,600 in June. And we've been trying to move up from there. We made a slightly higher bottom at 48,740 in the end of June. And we are not below that. So if I look at today's pullback, very similar to what I said on the index, that it's just giving back some of the gains it made over the last 3 to 4 days. But no change in trend. If I look at the wider picture, I think the FMCG index would probably continue towards 51,000 or even maybe higher than that eventually in the coming weeks. So probably again a pullback where entries can be made, but more shorter term to medium term. Longer term, I still think FMCG in general underperforms the market, but it is likely to head higher.
Okay, understood. So that's the outlook coming in on Nifty FMCG, and it's a optimistic outlook, at least, to sum it up. But Rohit, on that note, thank you so much for your time. Viewers, with that, it's time to slip into a very short break. More news and updates will follow on the other side of this break, so stay tuned.